The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
Welcome back, American Family Radio Network, Financial Issues. I'm Dan Celia. 866-300-9298, 866-300-9298. The major indices right now mixed, pretty much very close to where we ended up yesterday. The Dow's down 30, the NASDAQ's up 4. NASDAQ was up considerably higher than that yesterday, but the NASDAQ's up 4. S&P looks like it's about ready to go negative. It's slightly fractionally positive, but the Dow is down 30 right now, so we'll watch that. Primarily due to some bad news coming out of IBM. IBM dragging down. IBM has been the lagger in the Dow now for I don't know how long, but dragging down the Dow a little bit further with some bad news yesterday on earnings, and I imagine they're getting clobbered as a stock right now. I haven't looked at that, but that would be one of the reasons why the Dow would be in the shape that it's in right now. So I'll try to get a look here at commodities. I just lost my feed. Here it is. So the Dow, oil 95.91, so continues its upward movement. It's up over 1% right now. Natural gas is on a tear right now, as you can imagine. I just dug myself this morning out of 14 inches of snow, 3 degrees this morning, chill factor of 10 below. Here where I am, the whole Northeast is getting clobbered, and we are getting an Arctic blast coming in. We're going to be in single digits for another 2 weeks, or all through next week, apparently, or at least the lows down into the low single digits. So this has got natural gas doing very, very well. Natural gas right now at 466, and just the other day, I said, could we see a bump over 455, and we just hit that. So we're at 460 right now. The agricultural commodities, with the exception of cotton, are all in positive territory. Corn up 2.25 right now, up about 0.5%. Gold continues to slide downward at 1240. Silver at 1985. Let me get back to the calls, 866-300-9298. Let me go to Mike. Mike's calling us from North Carolina. Hey, Mike.
Hey, how are you?
I'm good.
I have 2 simple questions. One is my wife has about $78,000 she wants to roll out of a current IRA into something new, and we're thinking with as inflated as the prices are in the stock market, we really don't know which way to turn. And my second question is related, and that is, what do we buy that will have some stability after the crash?
Well, good question. Well, here's the thing, Mike. After the crash, the things that are going to have stability are probably the things that had stability during the last crash. And they're going to be very large individual companies. They're going to continue to have stability. So if the government, just to take an extreme of a crash, if we went into a depression and the government went bankrupt as a result, I just use this as one example. ConocoPhillips, they're not going anywhere. ExxonMobil, they're not going anywhere. I mean, there are companies out there that I would rather own over anything government bonds or treasury bills or anything for that matter.
Right.
So there are always going to be companies, and over the last 32 years as the companies that I've tracked and that I have on my list, the vast majority of those 160 companies, some of those 160 are mutual funds, but the 160 individual companies are good, solid companies. There's a few micro caps and a few that are a little bit more aggressive, but for the most part, the majority of those companies aren't going anywhere. There are sectors that you may want to look at, like energy, that are going to continue to do well for the next 30 to 40 years. Now, they could do a lot better if we had a Washington that would embrace an energy revolution that may happen in spite of Washington. But if they would embrace it, then they'd even do better. So if I had to pick one thing that is going to hang in there through all kinds of, I'm not saying they wouldn't take a downturn, but the recovery is going to be a lot quicker and the downturn's not going to be as severe. They're going to take a downturn. There's going to be a bit of a knee-jerk reaction to a crash that's going to turn it down and such, because, you're going to, then the energy side of things, when something like that happens in the economy, it affects demand. It affects demand on gas. I mean, people aren't going to be driving. People aren't going anywhere. People are going to try to hoard and save every dollar that they can, and that's going to impact those companies. But very short term and in a very small way. So that would be, there are some out there that would argue, well, some good bonds are going to hang in there. Maybe. I wouldn't want to be in any kind of bonds. I've been out of bond mutual funds, or at least making a case for that, since April of last year, and I'm still there, so I wouldn't want to, count on that. There may be some emerging markets that are hanging there, or some developing nations. Israel may be one that'll hang in there if they can stay in existence, but I would probably choose something. A few positions in the energy side of things, knowing that there may be some volatility, but they're not going anywhere.
Well, I'd also like to get in touch with the Timothy Fund people, and I guess I can find that on your website.
Yeah, there's a link at the bottom of my website, and if you click on it, it'll take you to their website. It's timothyplan.com, and I can give you the phone number. The phone number is 800-846-7526. They have an interesting fund that's on my buy list that is an Israel fund. I'm feeling pretty good between now and the next 4 years over their Israel fund. I'm feeling good about Israel. I think Israel's economy is going to explode. They are likely to be net exporters to the tune of about 40 to 50% of their natural gas resources, probably in the next 3 to 4 years. They're producing far more natural gas than that little country could ever use, and it is going to trickle down through corporate, all the corporations in Israel. I think they're going to do well.
Well, we appreciate your show.
Well, thank you for that, Mike. I sure appreciate that, and hope that works out for you. Thank you. And you talked about your wife's rollover. I just think that Timothy might be a good place to consider rolling that over, and you can check with them on that. Folks, my goal is that we're always biblically responsible. And I got a email and had a conversation with somebody a month or so ago in reference to one of the so-called biblically responsible funds, and that would be Guidestone. I think Guidestone has officially announced that they're not going to be they can't be biblically responsible. And I think one of their comments was that you can't be. Well, I told this pastor that told me that, tell him to call me, because obviously I'm happy to give them some. I'll come meet with them and give them a little seminar and meet with their board if they like, to tell them how to do it, because obviously they haven't been able to figure it out. So I'm happy to do that. But to say it can't be done is ridiculous. Now, you may be too lazy. You may not want to do it. You may be just chasing performance, and you don't care if the performance is in abortion, pornography, or what it's in. You're just chasing performance. So, you may be so consumed with the performance side of things that you're not caring much about the biblical side of things. You ought to just admit that, as opposed to saying it can't be done. So, the one mutual fund company, the one and only, by the way, mutual fund company that has done it successfully for the last 25 years is Timothy. And listen, folks, it's no secret, I would think, that Timothy is one that I've come alongside of. But it took me 3 years to do it. I've met with their fund managers and questioned and done my due diligence to the point of being ridiculous that it truly is what it is. Not to mention that the founders of the mutual fund company and myself are so evenly yoked, not only along the lines of how we care about this country in America, but how we care deeply about God's money and being biblically responsible. I could only wish that there was that much conviction. You know how many ministries don't even consider being biblically responsible with their 401ks? It's sad to me. And, I have these conversations on a monthly basis with some ministry somewhere. This is amazing to me. Well, you really can't do it. Okay, well, that's the propaganda that you've bought into, and that's fine. But don't say you can't do it. Anyway, let me go to Jonathan. Jonathan calling from Tennessee. Hey, Jonathan.
Hey, hello, sir. How are you?
I'm good.
Hey, I have two unrelated questions. So,
okay.
The first being, it's tax season. People are starting to expect returns coming up, things like that. Mm-hmm. My wife and I have been overpaying in, which we've corrected that. So we expect this year to kind of be our last big return.
Okay.
And so we have almost enough, coupled with a bonus or two from me, to pay off her student loans.
Okay.
Now, of course, we have some savings. We have about a month worth of savings. So the question is do I just keep everything that's coming to me, build up my savings, to where I have 6 months or so, but still have debt, or do I pay hers off and be able to, recoup that monthly payment into my budget? My student loans are starting in about 6 months. So
let me ask you this, Jonathan. First off, how old are you guys?
31.
And how do you feel about your job? I mean, have you had it? Did you have your job during 2008?
No, actually, I worked for a transportation company in 2008.
Okay.
And so during the downturn, they cut our hours. So I actually got into banking, went back to school, and I'm graduating in May from Liberty University with a finance degree.
Good.
So I think I have a future in finance.
Do you feel good about the bank that you're working for? I mean, as far as stability and all goes?
Yeah, they're a pretty large bank.
Mm-hmm.
So I think they've done well. Of course, I don't know if stock price is an indicator. They're about a third of where they were in their heyday, but they're four times more than they were at their worst point. Mm-hmm.
Well, I would say this, Jonathan. Here's what I would do. I would pay off the student loan.
Okay.
I mean, I feel like, I don't, I would like to see your savings be stronger. Okay.
Okay.
But I think that, if you feel pretty confident that, you're not going to lose your job in the next 6 months, right. I would pay your student loans off, pay your wife's student loans off, get rid of that.
Okay.
Use whatever you're paying for, whatever you were paying on the student loans to go into your savings now, for the next 6 to 8 months. And then once you get your savings kind of where it ought to be, where you feel comfortable with it, then I would shift that money over to your student loans.
Okay.
And I think that would be I think that's a great plan. I really like the idea of getting rid of your wife's student loans prior to yours, starting to kick in. And I think that makes a lot of sense, and that'll free up some, discretionary income and cash flow for you to be able to, start kicking into your student loans. And in the meantime, you can build your savings up to where they need to be.
Very good. Very good.
Is that all right?
All right. So the next question, and I've got to let you go, but I'll listen.
Okay.
Of course, I hear about the crash coming. I believe it. I believe it's coming. But my employer, a bank, put out an investment report that says, this year they expect slowed growth, 6 to 7% growth. Not what it was last year, but still growth. I'm one of those guys that got scared at 14.5 on the Dow and got out and got in money markets. And so, of course, I missed some growth. But does it make sense, since I'm 31, just to get back in, take whatever's coming, or do I sacrifice, who knows, a year and a half, whenever it's coming, sacrifice that time and just get my money mark?
I'm going to talk about that right after this break, Jonathan. Great question and good stuff. So as soon as we get back from the break, I'll talk about that. Keep listening. Financial Issues, I'm Dan Celia, 866-300-9298. We'll be right back.